What's going on, everybody? This is the Blockchain Backer bringing you the latest cryptocurrency news and analysis. On this video, I'm going to take a little bit of a different turn. On a lot of my other videos, we kind of dive a lot into the technical analysis um, on the charts, and hey, we can take a peek at it really fast too and see that, hey, Bitcoin's having a nice little morning. It's popped up from 6,200 up to 7,200. But if you've watched my last video, I talk about why I believe we actually need to come down to a little bit above 6,300, and that could be the bottom. So check out my last video if you want to take a dive into that. But today I thought on this video we would just kind of look more at the news and just see what you guys think of that. When I look at my other videos, I kind of do some technical analysis in the beginning, and then I swap on into the news, and viewership really drops off in the news. But hey, this might be something that people are wanting, so let's take a look at it. Now, the first piece of news that I have comes from Green Eggs and Ham at Ham, Eggs, and Sam. He also has a YouTube channel called To the Lifeboats. By far, one of my favorite people to follow in the XRP community. But he posted this morning. MoneyGram called down the remaining $20 million from Ripple. I would guess they're planning to rapidly expand on-demand liquidity corridors. So we head on over to this article, and Ripple makes investment in MoneyGram equity to complete the original investment commitment. Expansion of on-demand liquidity accelerated. Now, whenever we're talking about MoneyGram, and that gets me excited because it's about just people, people moving money. And I've talked about this in the past that I own a business and I have to do wire transfers across the world all the time. And while MoneyGram is exciting, it's still not, we haven't gotten to where I am one of the people that is able to use XRP in my transactions, but we're getting closer and closer. So, MoneyGram, a global provider of innovative money transfer services, today announced that Ripple, a provider of leading enterprise blockchain solutions for global payments, has made the final $20 million investment in MoneyGram equity, pursuant to Ripple's original $50 million equity investment commitment made earlier this year. Ripple purchased the newly issued equity from MoneyGram at $4.10 per share, which represents a significant premium to MoneyGram's current market price. So we head over to the MoneyGram chart. This is where they did that. They purchased all of that stock at $4.10 per share when MoneyGram was only $1.50, causing a big surge immediately, cooled off, and then all the excitement of them doing that led to an additional little run, and now we're pulling back again. Oh, let's see here. This funding will support MoneyGram's operations as the company continues to increase volume and use of on-demand liquidity. Ripple's product that leverages the digital asset XRP to send money globally, instantly and reliably for fractions of a penny. Our partnership with Ripple is transformative for both the traditional money transfer and digital asset industry. For the first time ever, we're settling currencies in seconds. This initial success encourages us to expedite expanding our use of on-demand liquidity, says Alex Holmes, MoneyGram chairman and CEO. Partnerships with companies like Ripple support innovation and allow us to invest in creating better customer experiences. I anticipate furthering our growth into new corridors and exploring new products and services. So, hey, that is pretty exciting. Panda Ripple XRP also mentioned this too. Partnerships with companies like Ripple support innovation and allow us to invest in creating better customer experiences. And on the article that he shared, we've got a lot of the same stuff here. But Brad Garlinghouse, Ripple CEO, stated digital assets and blockchain technology have the potential to make a tremendous impact on cross-border payments. MoneyGram and Ripple is an example of that. So this is really just kind of laying the foundation. And when I think about MoneyGram, and I think it is great, it's cool, it shows a very good use case, but the surge that I think we're all looking for is not in any way going to come from any of this MoneyGram stuff. But you can think of this MoneyGram partnership as being like the marketing for Ripple, the marketing for XRP. Here you are, you're looking at a company, and especially if MoneyGram starts to kind of go up in value, right? If investors start seeing all this value of owning the MoneyGram stock, they say, hey, MoneyGram was able to save a ton of money and become very profitable using this. And then other people will naturally just want to say, hey, what is that? How do I become a part of that? So think of MoneyGram as just being like the big marketing of Ripple and of XRP, and proving to the rest of the world this use case. And once they prove it and once the numbers show it, how profitable MoneyGram becomes and how much of a better customer experience it provides, this will lead to more companies wanting to be a part of this. Um, uh, be a part of this. And over here, Alex Cobb at Alex Cobb underscore. I get that it's mostly fake liquidity, but dang, 10 billion. And he's showing the volume here on CoinMarketCap for XRP. We can head over there and see that too. The volume at 10 billion has just never been seen before. We can head over here to the historical chart, historical data, and you can see what the volume has been in the past. We've got 2.9 billion, and then suddenly we're up at 10 billion. Let's take a look into the past and see if we can all time. Okay, so we scroll all the way down. The last time we had a really big liquidity time would be in September of 2018. Here we go, September 21st. It got up to 4 billion. So there's two things you can take from that, and it's probably a mix of both. One, there is a huge amount of volume right now because people are capitulating. I mean, we're in a straight down red line. Two is that Um, a lot of it is fake. So we probably have a mix of both. A lot of it is fake volume, and also, in addition, it probably is boosted. The coin market cap data is just not usable anymore, most likely. I mean, it's so hard to determine whether or not how much of it is real. Now, they've come out with these new liquidity metrics, but still, it's kind of questionable on that because they're not including everything. So I don't know, but hey, when we go back and look at the past, we can see that when we had a huge explosion in XRP, which would be right here, September 18th through September 24th of 2018, this is the volume that we had between 2 and 4 billion, and here we are sitting at 10 billion. That's pretty interesting. Then I saw this article over here on Cointelegraph saying 89% of Chinese blockchain firms have tried to issue crypto. 89% of China's blockchain firms have allegedly tried to create their own cryptocurrency, according to a senior executive at the local blockchain, blah, blah, blah. According to the state-run CCTV on November 21st, the president of Beijing Blockchain Technology Application Association revealed that the vast majority of blockchain industry in China is focused on tokens, not blockchain. And that just comes back to the whole utility aspect of XRP and why it's different. The whole space kind of gets this bad reputation because in the last bull run, tokens were just being created out of thin air and they did absolutely nothing. Huge hype was created around them. Nobody really understood them, but they said, "Hey, I can get gains on these like I've gotten gains on everything else." And they were pretty much right. Everything pumped. So tokens were just being created for everything. And now we've seen the bear market has completely thinned everything out. I mean, if you look at a lot of really big names, I think of like Ethos or Icon, Stratus, a lot, and Stratus not so bad, but when I think of like Icon, right, these guys have lost over 99% of the value of their token. And that's just not what XRP is, right? Yes, XRP is down like 90%, 95%, but when you're at 99%, you've legitimately lost everything. It had never found a bottom, it just practically went to zero. And I think we just saw this of so many tokens being created that there just was no real value. It was just a money grab. So I'm looking forward to the future because I'm going to assume real investors probably figured out, or at least institutional investors absolutely noticed that that happened. That institutional investors are not just going to invest in some token because they created a token out of thin air. It's going to be just like Brad Garlinghouse says, Charles Hoskinson, it's going to be completely driven by utility this time around. Sure, there could be this little pump and dumps, but I really think it's going to be driven much more by the utility. Here's another article on the same kind of topic from CoinDesk. 25,000 blockchain firms in China try to issue cryptos. Tens of thousands of Chinese blockchain companies may have tried to issue their own cryptocurrencies. Led by the Chinese central bank, five financial and technology authorities jointly published the Blue Book of Blockchain on Thursday, outlining illegal and fraudulent schemes in the blockchain industry. Approximately 89% of blockchain firms in China, some 25,000, might have tried to create and issue their own tokens, while only 4,000 are fully focused on blockchain applications. And of course, it wouldn't be another day in cryptocurrency if we didn't have something about Tether and Bitfinex. So, another class lawsuit claims Bitfinex and Tether manipulated the Bitcoin market. Crypto exchange Bitfinex and its sister firm stablecoin issuer Tether have again been accused of working to manipulate the Bitcoin markets. A new class action suit filed by Eric Young and Adam Kurtz at the District Court in Western District of Washington on November 22nd draws heavily from details that emerge in the case brought by the New York Attorney General in April against the same two firms. It's also the second class action to have been brought in recent months relying on the New York case, which is still ongoing as the defendants appeal over whether they must continue to produce documentation. The Attorney General claims, among other things, that the Tether stablecoin was not fully backed by US dollars. Though we kind of all know that if we've been in this for a long time, the big controversy regarding Tether. And of course, all the news out right now saying that it was one entity and somehow manipulating Tether to create the big Bitcoin pump. Mm, I mean, I could see, and like others have said, I mean, maybe that did play some into it, into the Bitcoin bull run. But if it did, it might have just been to get things set in motion. Who really knows? But there's one thing for certain, everybody and their grandma was buying cryptocurrency at some point at the end of the 2017 bull run. So to say it was just one entity doing all that, yeah, there was. I mean, there's even shows called like Crazy for Crypto that are posted on like what CNN International or MSNBC International or something called Crazy for Crypto. So, I mean, yeah, there's some kind of play into it, but I don't really buy it due to the fact that society was going absolutely crazy. You couldn't pick up remember how expensive graphics cards were back in 2017? I mean, everybody was buying them not because of how great graphics cards are, but because they were mining Bitcoin and Ethereum in their closet or in their basement or wherever. So we'll see. See if anything comes out of that. And lastly, I saw this posted from Zero Hedge, the difference between investing and speculation. And I thought this was just a good thing to end on here. So as you know, the stock market, United States stock market is at record highs right now, and it just feels like the biggest bubble ever is getting blown right now. And they're kind of commenting on it and saying, in today's market, the majority of investors are simply chasing performance. However, why would you not expect this to be the case when financial advisors, the mainstream media, and Wall Street continually press the idea that investors must beat some random benchmark index from one year to the next, such as, the Dow or the Nasdaq? Chasing markets is the purest form of speculation. It is simply a bet on prices going higher rather than determining if the price being paid for those assets are selling at a discount to fair value. So, where have we heard this? Chasing markets is the purest form of speculation. So, if something's already pumping a green candle and you start chasing it, You're betting that the price is going to keep going higher rather than investing or determining if a price to pay for those assets are selling at a discount to their fair value. And what has really been circulating around the internet right now is these new fair value metrics for different cryptocurrencies and how XRP is up there near like 75 cents or a dollar. And I think we can all agree with that, that we all feel like we're paying a huge discount buying at 20 cents. And, back on my last video when I talked about, chasing other, giving up because it's just not doing what you want it to do and you're moving over to other coins to chase those. So I think in the end, we just need to really remind ourselves, when you're chasing those markets, it's complete speculation and you're betting that those prices are going to go higher rather than trying to find something that is a fair value or discounted to the fair value. So that's going to wrap it up for me right there. And guys, I really appreciate you all watching. Please like this video, subscribe to my channel, and as always, this is not investment advice. I am not a financial advisor. If you ever need a little bit of a pick me up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.